All right. Good morning, everybody. Hump day. On the screen right now are the spot gamma levels on the SPX and the ES. If you want to just take a screenshot and capture that, I'm going to swap to the NASDAQ next if you want to capture those. So there's the NDX. It also has the NQ. And there's the Qs. I'll be marking out a map on the S&P like I do every morning, post it in the chat. All right, the Russell small caps are down the most. The Dow Jones sitting all by itself in positive territory, not quite up 0.25%. Hong Kong with some stimulus. They just did something that they normally don't do. I was reading an article on Seeking Alpha about some stimulus measures that Hong Kong did. So they said it really didn't stick that much. It's already starting to fade off, but this would add to the K-Web constituents, those PDD, JD, Baba, Baidu, maybe even a little bit of, say, Neo and Lee, XPEV. And it had something to do with their stimulus measures and changing their budget mid-year. They said something that China normally wouldn't do unless there's a crisis looming. So something to think about on that side. If anyone's interested in that article, it's from Seeking Alpha. I can post it later. Just hit me up. So Japan's in the green slightly, up 0.25%. The UK also right in that same range, but most of our other US markets are down. The S&P 0.25%, the NASDAQ closer to 0.5%, and then the Russell down 0.5%. Google didn't do too well yesterday. The expectation was going to be that they were going to miss on ad revenue, but it seems like it's their cloud computing that's getting whacked. We do have some data today with new home sales. It's like an early barometer. Bank of Canada is going to do a rate decision. Think about when we do the FOMC and we have Powell come out and they tell us whether they hiked or not, and then he takes questions and the market gets all violent. Well, that's what Canada is doing today. This is the Canadian version of that. So you kind of get a feel for what's at stake here, right? This it'd be just like how we would be sitting and waiting for the information and how it would very likely be a volatile situation. That's exactly what we're waiting on with Canada. After they make that decision and the report comes out, they will be doing a press conference. So we want to be looking forward to that. We got the 5-year note, an additional auction today. We got European Central Bank President Christine Lagarde also speaking today. So consider this the calm before the storm. And that's what today's morning briefing is titled. We do have Powell later tonight. But like I've mentioned before, you want to know where they are speaking and what they are speaking about. Sometimes it's a pre-recorded message, or they're in a forum where it's not likely to produce any volatile situations, especially if they're not going to do any sort of Q&A. So just because we see that there's a Fed speaker talking doesn't necessarily imply that it's going to have some impact or that it's going to move markets. You always want to dig a little bit deeper. This after hours Fed Chair Powell speech, I don't know anything about it. It could be, Boy Scouts of America lunch or dinner for all we know, right? We don't know if he's taking questions. We don't know, what his agenda is. So, the market's going to be closed anyways. But you want to be thinking about, as we near the end of the day, whether or not you're going to hold trades through the overnight hours based on how volatile we could get in the overnight hours. We're going to get some data out of Japan. And I have referenced multiple times a video that I have made last year on the intervention that Japan did. For the life of me, I couldn't find it. I've been searching all over the place for a while now. I found it. Yeah, finally found it. So it needs a little edit work, but I'll be trying to get that out before the end of the week. And it just kind of reaffirms some numbers, right? I went and looked at the dollar when that intervention came out, how far it moved, how fast it moved. I looked at the S&P. We moved 1.43% in 60 minutes. Talk about the S&P moving, 1.5% on the day for an entire 24-hour trading cycle. We moved nearly 1.5% in 1 hour. Over the course of the next few days, we moved 200 points. This threat of Japan intervening is looming constantly. We're going to look at US dollar Japan, you're going to see it. It's this constant threat if they come in and intervene. So here's the Japan 10-year. Now they have made statements that they were running yield controls at 0.25%. Then they slacked that off and allowed 0.5%. Then that continued to get challenged, and they said, okay, well, we'll tolerate 1%. And now they're talking about widening that even more. Beside that, though, they've still said and continue to say that around this 150 area is their line in the sand. They don't want to see it through that and above that, and that they will intervene if we get through there and above there. Well, we continue to hold these highs, so it's continuing to be a threat. Until we sell off and back away from that level, the threat is going to remain there. The article that I was reading talked about a very large options wall up here. We'll just refer to it as a call wall, even though they didn't refer to it as that in the article. And those options are going to be expiring today and tomorrow. Same with Canada, same with China. There's a lot of FX options that are going to be expiring tonight, tomorrow. And then what? All right, that's kind of and then what happens if that call wall isn't there? And for anybody who's already familiar with optionality, that call wall is a significant resistance level. Every time we go into that wall, there's massive sellers waiting there to just pounce on it and knock the market right back down. That's working in our favor, keeping US dollar Japan down, but take the call wall away and then what? There's no ceiling here anymore, right? Yeah. Yeah, you like it. We do get crude oil inventories today at 10:30. That can have a direct impact on the market. A lot of times it don't, but don't get sleepy on that one. Watch the clock at 10 o'clock, at 10:30, excuse me. We're going to get that EIA oil report. We're going to get the oil inventories. We're going to get the strategic petroleum inventories. And there's a lot of times when steel will correlate with oil. I worked in both industries for most of my life. And now, trading in these industries, I'd rather trade them than work in them, I can tell you that. But if you're looking for a cheaper way to play in this potential move in the market and you don't want to do something like USO, you could look for some steel trades like X Steel. That's not the only one, it's just the most popular one. And there's some cheaper ones than even that, right? There's quite a few steel names. Their options aren't exactly stellar, but especially if you're leaning into the shares, then some of those cheaper names might be the way to go. And it's just a short-term trade, right? We're not talking about radically altering the course of markets. Just a 10-20 minute trade and you're out again. We do have Facebook earnings tonight. I had meant to mention this the other day about a platform that I was looking at the other day, that when you brought up a stock chart, AI pointed out various bits of information on that stock chart. I found it really interesting. I was looking at Meta, and the AI on there pointed out where Meta's biggest earnings miss was at and how big the miss was. And it pointed out where Meta's largest beat was at and by how much it beat. Just all kinds of interesting ways that AI continues to assist people. And it wasn't like it was trying to assist me with a trade or anything like that. It was just providing some background into the candles and the gaps and the things that were on that chart. That's fantastic. Some of the best analysts that I see start with the left side of the chart and work to the right, explaining highs and lows, pointing out things like the October lows with the Bank of Japan intervention, or the March lows of this year when we bailed the banks out with that subtle little assist, right? Or the AI explosion in June when the markets just ripped to the upside. All of those little parts and pieces are forming a narrative that gets us to where we are, and then we have a better understanding of what price might do next. But it reads from left to right, understanding all of these events. Well, new traders don't know what happened last year. They're new. They weren't trading at that time, or maybe they were, but they didn't quite grasp the relevance then. So it's just one more AI assist. And the craziest thing, for those that are already asking me, oh, where was that? Where'd you get it? It was Google Finance. I know, right? Free, right off of Google, that you could bring up a stock chart in Google Finance and the AI automatically starts plotting out this information from the past, not trying to tell you where to trade or that it's in momentum or going long or short or trend or anything like that. It's just putting time and information on that chart. Fantastic, right? Who'd have thought? All right, 10 o'clock, 10:30, 11:30, and 1 o'clock. That's what we got on the table today. There's also a GDP report coming out. There's an app that you can get on your phone, the Atlanta GDP something or other. Just when you're on the options store or the phone store, wherever you get your apps, then type in like Federal Reserve or something like that, and the app should show up. And what it'll do for you is when the revised numbers come out or the GDP numbers come out, you'll just get that little notification on your phone. I'm sure there's something similar to it on computers, but I just use the one on my phone. And that number, when it comes out, is very likely going to move markets. So looking at the volume this morning, we're sitting around 118. That's the average. It's fine. It's exactly what we would expect on any given day. You can see how it's lower than yesterday, and that was lower than the day before. We've been kind of trending lower and lower, which is usually what we see in volumes after we set a low and we're trying to rally back out of it. But none of these levels are extreme. So most of the time, this lower indicator, this volume accumulation, isn't going to give us any information, which is fine. We just turn it off and get it out of the way. There's a lot of stuff on my chart. I get it. It's loud, and there's just a lot of stuff here. But start with what's below us, this indicator. I'm starting with this so I can get it off of my chart with these big bubbles. The put wall is still 42.24. This is from spot gamma with those levels that we were talking about. The volatility trigger is at 43.23. Zero gammas at 43.42. Consider that zero gamma the bull bear line, bullish above, bearish below. And then the call wall at 44.23. They're rolling it up, by the way. All right, so we got that noisy thing out of the way. The orange line here is the weekly 50 EMA. The orange line down here is the weekly 50 SMA. It's also right next to the COG line 42.11. We're holding right at this weekly 50. And to visualize that, here's a weekly chart. There's the 50 underneath us. There's the 50 that's over our head. We're pinched between these two 50 MAs. If we get through that, we've still got a 10 and a 20 to deal with. So a lot of overhead resistance. But on the week, right now, these 50s are everything. If we lose that lower 50, oh, we're going to 38. That's a done deal. We better keep that. And we can just round it down to 4,200 and say we really need to keep that 4,200. We really do need to keep that 4,200. 43.33, the level I've been talking about all week, is the 50% line of last week's candle. Now there's other things that we could measure out here, but since we still need to get through 43.33 for any of that other stuff to be measured to have any relevance, then there's no reason to dig into it now. Let's just worry about 43.33 and 4,200. Bring it over to a daily for a moment. Any move to the upside is going to be met with significant resistance because every single moving average we have is over our head. The 10, the 20, the 50, the 200, they're all over our head. We're significantly underwater. We can see this micro double bottom, and we went lower than the previous low, but not by very much. And I would argue not enough. If this was supposed to be a classic bear trap that sucked in the bears and tricked them into thinking we were really going down, then that was a very poor showing. It's not much of a trap. Usually when we don't get a really good trap, it's because it wasn't a trap. It's just a continuation to the downside. Now we don't have that yet, but that's what it's looking like so far. So we are consolidating right now. We're going to focus on this doji bar here. 42.80 on the upside, 42.13 on the downside. As long as we're within this bar, then we've got a chance of continuing this move out. But where on that bar really matters. So we have the 50% line. We really need to keep this. So far, we are keeping it, but it needs to keep, right? That's 42.47. So we got a relatively tight range here, 42.47 to 42.80. So far, we are holding underneath the daily pivot point. We've already interacted with it, so it's not an MDP. Any move to the upside today is going to have to deal with that daily pivot point. If you've done any pivot point trade strategies, not like our regular open, high, low, close pivot points, but an actual floor pivot trade strategy, it'll usually discuss like an S1 bounce for an R2 trade. If you haven't gone through any of that kind of trading strategy material, then you probably have no idea what I just said. S1 is a support one level, and R1 and R2 are resistance levels. They're all based on math formulas. Usually you can bring up something like John Person's pivot points. Just type in the word person and you'll get the PPS. That's John Person's pivot points. Or the PMC, that's another John Person's strategy. And then Person's pivots. Now, his pivots are pre-calculated. So if it deems the market bullish, it will put the it'll put the S1 and the R2 if it's bullish. If it deems the market is bearish, then it'll give you an R1 and an S2. All right, so that's kind of the idea behind the discussion today, that we're at an S1 that gives us an R2 target. Yeah, I know, I'm a nerd. $10-day 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. The point of control is a long ways away at 4,400. We've got a lot of resistance between us and them. But when we look at the volume profile, there's not a whole lot here to hold us back, which is really good, right? That's exactly what we want to see, that we have a clear path back towards that point of control. So while we do have measured levels like the 50%, we've got yesterday's highs and things like that, we don't have any volume price shelves to deal with, right? Price structures that we would need to be concerned with. It's got a nice shallow area. We tend to move through shallow areas relatively quick, demonstrated by this price move that we had on the way down. That'd be the same kind of move we would expect on the way back up. We are starting to form a more cleaner classic B, which I had mentioned the other day. That's what we were very likely to form if we stay down here after having had this classic P shape, right? This is what we had, but the longer we stay down here, this is what we're forming. It's very likely that by the end of the week, our point of control will be down here with us. So rather than us going to the point of control, we're going to bring it down here. That's the baseline bet. Now, we could always break this zone and go back up, but it's more likely that we hold this zone and we bring that point of control down. We have a new VPOC from yesterday's price. So any move to the upside today is going to have to resolve that. $42.71. Remember that these aren't necessarily support and resistance levels. They're more of an area where we anticipate a reaction out of the market. The point of control is where the greatest amount of volume happened yesterday. That's what we're using, yesterday's point of control. So if it was where the most trading happened, we can assume that when we go back there today, there's still traders who want to get some trades there. And that makes sense because it's where the most trading happened the day before. There could be unfinished business at that level, or there could be buyer's remorse or trader's remorse at this point. If somebody went long and we continued to sell off from there, and now we're giving them a chance to get out, they may take it. If they had went short there and we get back to that level and we're giving them a chance to get out, they may take it. So you can see why, if that's the heaviest traded area from yesterday and we go back there today, whoever it was, long or short, might decide this isn't working out. Maybe I'm going to get out now. So we're just expecting, again, heavy trading at that level. That heavy trading, more often than not, is going to cause a rejection in price at least once, right? And that's where the first touch trade strategy comes in. Usually a first touch play can give you a good 4 to 7 points, but it doesn't hurt to set a runner so that every once in a while you get one of those outsized moves where it really just continues to go and go. But more often than not, it's just a quick rejection, couple of points, you're in and out, done, and you move to the next trade. So keep your eye on 42.71 when we get back up into that spot, because we will eventually someday. We want to see if there's going to be a reaction out of the market. You want to keep your eye on the dome, right? The depth of market, the trader's dome, called the active trader on Thinkorswim, and see the level of participation at that level. You can use Bookmap too. It would, it will give you a better visual of the amount of trading activity around that zone. And then things like, volume delta between that area as well, to see, how we're going to work through that level, because we will go through it eventually. Looking at where we're at for the week, we're still sitting in the middle of the range. The gray line is where we closed on Friday. So we're doing better on the week than where we closed. But in the grand scheme of things, we haven't done anything. It's been a week of hold your breath. We're all waiting on these big FANG names to report. And so far, it's been a mixed bag, right? I haven't had a chance to go through everything with Google yet, but I did hear they missed, or that they're having issues with their cloud computing, making money on that. Most newer traders don't look at Google as cloud computing. They think of, the search engine, but there's a lot to Google, right? So it's a really big deal. We're not done yet. There's still other big names that need to report. And there's still a whole lot going on, and we're still looking at US dollar Japan. So a lot of things that are balanced this week on this hurry up and wait kind of situation. Until this hurry up and wait ends, it's the same thing that we've been saying all week. We sell into strength, we buy into weakness, we expect to hold the range until the range no longer holds, right? Now, most of the time, when we don't know when that is going to happen, we just keep running the range trade until the range trade doesn't work anymore. Sell into strength, buy into weakness, and keep in mind the megaphone concept, right? That if you have a range and you then have price testing the edges of that range, and where does liquidity reside? On the other side of the pivot, so that you get price going just a little bit farther every time until finally one side breaks. It's where the megaphone pattern comes in. Liquidity resides on the other side of the pivot. So when we get to a high of yesterday or the low of yesterday, we don't expect to stop at that high or at that low. We expect to cut through it to the other side because liquidity is on the other side. But that begins to build us into a megaphone pattern to where we start to draw trend lines in more of this cone shape. And then eventually something breaks. we are 1% below the 10-day moving average. You can see how we've sort of stalled out in that wave. Looks like we may be even beginning to expand farther away from the 10 again, although that's up for debate at this point. And for the week, we're 2% below the 10-week. That might seem like a lot, but even just, a few weeks ago, we were closer to 3%. And back in March, we were at 3 or really close to 3. So, we've been lower than this. It's not that bad. And looking at it from, a bit of the wave, we are coming back up from the lows. So the 10 is coming down to us. We're moving up towards it, a little bit of both. This is telling us that we're not oversold. We haven't moved too far, too fast. It doesn't owe us a mean reversion back. There's no sort of, linear regression, dot plot statistics, least squared methods, nothing suggesting that it owes us a move back towards the mean. Yeah, I know, I get it. In my psychology classes, they really promote math. We had to learn a lot of math to get my master's in psychology. Which, hey, it worked for me as a trader. Understanding all that math is a little bit of a leg up. All right, so there's Microsoft. We're at 344. And that puts us way up here above all these pivots, right? So we're past all this stuff here. And the reason I point that out is because we have this same sort of shape on the S&P. It's just not so clean, right? And using the pure price method, when we have a topping pattern and the market has set that lower high, breaking this low generally is the trade trigger, right? So we got the Microsoft, there's that high, and we kind of really didn't get anything good there, but we came up and we failed to get through that high, which implied we were going to roll over, and that would be the break. That would be the one that really got us down there. Only instead, we've gapped up now. So we're sitting up here, and it negated this whole idea that we were headed to the downside, because now we've got above that high and we're above that high. It's very likely also that we're not going to set a lower low from here, right? We're going to set a higher low. So this will be higher low 1, and then whatever we do up here, a little bit of a pullback and a move up, that'll be higher low 2. And we'll have, lower high, higher high, cut through that zone. So this is a turnaround in one of the major FANG names. Now, Google, on the other hand, had been one of the few that was kind of keeping its stuff together, right? But now it's sitting at 130. Now, to kind of put that into some perspective, we're still in the zone. Google is still in trend. So even though it's getting whacked this morning, the trend is still intact. Until it breaks this low down here, it's still in trend. Putting it on a weekly, you can see how the trend is absolutely still there. That just brings us down to the weekly 20-period moving average. So it looks bad, and I'm sure it felt bad for anybody who tried to go long on that thing into the close, but you kind of had some warnings with all these wicks across the top here. Now we just need to see if this wick from back here, that 128, 127, that buyer defense, we need to see if that's going to pick up if we cut into that zone today. If we break below that week's low, 127, then we could be a little bit concerned about this trend. Otherwise, the trend is still intact. We're still bullish. So if that has trend and now Microsoft has trend, we've got to worry about Apple and its trend or lack of. This has been trending to the downside. 2 higher lows, 2 higher highs, or 2 lower lows, 2 lower highs. That's a full set. That's trend to the downside. How this week closes, whether it sets a new low below this 167 pivot, or whether we run up and we get above that 182 pivot. That's very likely not going to be just this week, but that's what was in focus, right? And that is a wedge. Don't worry about making it pretty. And, you know, should you do just the bodies? Should you do the wicks? Can you do the wicks and the bodies? Don't worry about it. I promise it doesn't matter. You know, you want to clean it up and cut it a little bit. Doesn't matter. It's just the visual, right? So that 50 needs to hold. We got 165 below it, but the structure of the move, just think about how far Apple went in such a short period of time and how it very likely needed to digest a lot of that move, right? It was almost broke records for how amazing that move was. It wouldn't surprise me at all if we come down and get into that 161 before it finally makes a move back up again. It has a lot to digest after such a magnificent move. But the levels are clear. We break this low, we can get to this 162. If we break this high, then we're going to start working our way back up. We'll focus on 190 and then 200. But from where we're at right now, there's no play sitting right in the middle of that pivot and that pivot. And earnings is on the 2nd. So we still got a little bit of time. So we got Meta here. Got earnings after the close today. Got a whole lot of nothing right now this morning. And we have a minor TRB setting up here. So if we can break out and above, say we get above 318, we could easily go to 330 today. I know that sounds fantastic, right? This is a weekly though, so let's kind of dial it into a daily, especially with earnings. We got a $24 expected move. And we've got a 21-day ADR of 2.8. Looking at about $35 expected move. Right now, these are the ranges projected by the optionality. 321 and 337 to the upside, 304 and 288 to the downside. If we look at the implied volatility levels, you know, Meta's got a history of some pretty big gaps. We can see how the earnings volatility has been going lower and lower, but this time it didn't go lower. We're actually pretty close to the previous earnings, and it's the 3rd time in a row. So we set this low here, had a matching level of implied volatility on the next earnings, and now we've got the same one on this earnings. What happens usually is we get this big blowout, massive surprise earnings, and for the next couple of earnings after that, people really overcompensate. They really overproject. And of course, since they're reaching way too far, those overprojections miss. Volatility gets lower and lower as each consistent earnings goes by. And then we kind of start the whole process over with a really big miss again. It seems almost like we're due for a really big miss again. Now, earnings are, a roll of the dice. I don't know. You don't know. Nobody knows, right? Because we can all figure out what they did over the quarter. That's not too hard to figure out. The question is, how do they think they're going to do between now and the next earnings? And that's a closely guarded secret that they don't let out until the earnings comes out. So each company has their own little widget. With Tesla, it's deliveries on cars. With Netflix, it's new subscribers. There's always something, right? Apple, it's with how many phones. So a lot of times that widget, that number is going to be the headline number that moves this thing. We'll see. I'm going to scrunch this up really quick. So for anybody who wants to catch a picture of these labels, I like to read them in a line like this. I find it easier than reading them all spread out on the chart. So with it scrunched up real tight like that, you should be able to catch, a screenshot. I've only got 5 earnings on there. Normally I run this chart on a 9 earnings. Not sure why it's not working back there. Whatever. Probably because it was Facebook and then it now is Meta. Goofy thing. We got that China stimulus, but we're not seeing it in the KWeb constituents. They're down 2%. Communications are down, which makes sense because that's mostly Google. MCHI, which is China again, also down. Semiconductors are down. Emerging markets, that's more China. Bonds down. Might have been easier just to say what's up. What's up? Bitcoin's up 2%. Technology behind that at 0.5%. And then and that's it. Nothing else is at the level we'd want to see. Six names in the NASDAQ are up at least 0.5%. Micron, Microsoft, Qualcomm. Not really anything that would tickle. Below 0.5%, 31% of the NASDAQ is down 0.5% this morning. Semiconductors significantly, right? From Intel to Analog Devices, Texas Instruments, NVIDIA, Microchip Technology, Broadcom, On Semiconductor, Marvel Technology. It just doesn't stop, right? AMD, all of them. So semis are getting whacked. And for the S&P, 21% of the S&P is down 0.5% this morning. And it does have some semiconductors, but the rest is scattered into various places. Nothing really stands out other than the fact that we've got the FANGs getting hit. And we got some financials that aren't looking too good between different kinds of financials too, from PayPal, Visa, MasterCard, Wells Fargo. Got a mixed bag for sure. Speaking of mixed bags, what's pot doing? Yeah, you like that subtle little transition, didn't you? Yeah. All right, so we got Bitcoin, USO, energy, jets. So a little bit of the airlines. Maybe we'd want to dig into jets a little more. What I'm not seeing is pot stocks or, MSOS, which means we're not getting flows there. Yeah, we're not getting any flows there. It's all over the place. We did break that 50% mark, by the way. Remember, we had measured that out and said it really needed to hold that level. Yeah, it didn't hold that level. So breaking that 50% now kind of implies 25%, because this is a half back break. It's a part of that's a trade strategy. We would target 25%. That puts us at around a 590. And if that don't hold, then yeah, we're gonna take it on down. Just a second, I was looking for that article that I referenced earlier. So this isn't looking good for any sort of, a rally day. We're going to need the fangs to turn around and participate in the move, or we're not going to get that move, right? That's kind of the long and the short of that. Whatever China tried to do for that stimulus push, it didn't stick. And that's a little bit what the article had talked about too, that they put in some subtle stimulus and it didn't stick. So if we were going to run anything today, we'd want to focus not on the names that are already up. We'd want to focus on the names that are down. The idea behind this is if they're up right now in the pre-market, then they're very likely names that are opposite of what the S&P is doing. So if we do start to see the whole of the market start to turn around and go in the other direction, those names that are up now very likely won't keep that move up. There'll be a bit of a capital rotation and they'll start to fade, and the names that are down will start to go up. So you're going to want to target things that are already down if we do start to go to the upside. Things like semiconductors, the fangs. With Bitcoin up, it's worth maybe looking at the proxies. Something like Riot. Yeah, Riot's up. Could get a break and a continuation. Let's get outside of yesterday's high as a good starting point. We could keep this level. I think it's more valuable to take this level back here. these are weekly levels. So if we bring it down into a daily, we've got that gap up that needs to continue. Kind of got the line in the sand that needs to hold. 1160 is the next area. So Riot, Mara, getting a little bit of a breakout on Mara, at least on a weekly. We had a really nice IX10 down here. Good follow through. Breaking through this level can start triggering the what Rob from the Strat talks about with that popcorn. What's it called? The machine gun. Oh heck, I always screw the name of his strategy up. It's basically a reversal stop trigger system. You should be able to find it. Look for the Strat. That's what it's called. And he talks about how, well, his logic, as he describes it, would be if all of these down days were new sellers shorting the market, then where would their stops collectively be? Likely above those candles. So as we start to get like a trend line breakover and we start moving to the upside, we trigger those stops. Well, if you're short, what's your stop doing? It's going to buy to close. And that buying adds to the buy, gets you to the next level, adds to the buy, to the next level, adds to the buy. It's not my strategy. It's not my concept, but that's the Strat. And he has a funny little name to it. Something about like machine gun, pivot, reversal, something. I don't know. You'll find it. But with Mara, we're getting that breakout, IX10. So 10.95, basically $11 is 50%. We can get through that. We can get to the top of this zone up here, 12.25. Just be aware that there's, been a history of selling there, and we don't know if we're through that liquidity yet. So even if we do get in there, there's very likely going to be some big sellers still waiting to unload at that level. Bring it into the daily. That's a significant zone, right? And we're fighting with the 50 period moving average, the 200 period moving averages. There's just a lot of resistance and a lot of trash. Now, these Bitcoin names have been beaten down pretty hard. They've got a lot of work to do. Or, blockchain, Bitcoin, they're proxies to Bitcoin. So Riot, Mara, coin itself. So we can look at Coinbase. Coinbase had, I missed this thing yesterday. I missed the news on this, but I know a few people, kudos to you, you know who you are, that got all of that and just, hey, sometimes you get it, right? And it's not luck, that's diligence. So good job. I didn't get any of it. I didn't catch the news on it, but we can see that it's up a little bit with this morning's kind of, it's just a proxy, right? The rising tide of that area with Bitcoin up, the Bitcoin proxies are also up. Just be aware that there was news that whacked this thing down yesterday. From the measured move perspective, we did make it up to the 1, 2, 3, 6. And, it does what it's supposed to do. But we are back down now below that 786, or at least we were yesterday. And that's a bit of the struggle. So that's the level we got to get through. If we do continue to the downside, then 79.70 is the halfback. Is if we get rid of all this stuff, then that's just the range, right? 100%, 50%, 0. That's our range. That's the halfback. So we cut that. We got a halfback break. We'd target 25%. That would get us down around 75, call it 76. Other than the Bitcoin things, there's not really much out there this morning that would that I'd want to target. But if we do start to rally, semiconductors are going to be my main focus, right? They're down well. So if we do start to go up, they'll be the ones that I'd want to go after, not the ones that, not other names that are already up. That's what I got for you guys. Be careful, be safe, watch the clock. I'll see y'all tomorrow.